Hi, Julie. Thank you so much. I'm so happy that you are joining me today. Could you please introduce a bit of who you are and what you do in the multifamily industry?
Sure. Thank you so much for having me. My name is Julianne Peterson. I'm with Old Capital Lending, and we are a premier provider of debt. So, what kind of debt? Well, mostly about 85% of our business is done in multifamily. And so, we are real specialists in multifamily. We've been in business for over 30 years. We've closed 5,800 loans. So, we know what kind of asset goes with what kind of loan. How the performance of that asset will affect the loan dollars. So when you work with Old Capital, we don't just source loans, we also bring and help you structure the deal, whether it's with limited partners or with sponsors or with people like who can help you, due diligence, with attorneys. We all partner together and help you. That will help strengthen your deal and your
That's
team.
wonderful. So, with your expertise and experience in lending, could you please share with our passive investors on some of the things they should look out for from the lending perspective when they vet a deal?
Yeah, it's a good question. I'm a passive investor, so when I think about how other passive investors would be looking at a deal, a lot of times it'll look at the structure of when the takeout is, especially if you're looking at a deal where you've got a bridge loan. And a bridge loan is a short-term loan. Usually we have this type of loan on an asset that is not stabilized. Stabilized would be considered 90%, where all you're really doing is people are moving in, moving out, but sometimes there's too many people moved out, less than 90%. So the type of loan that will be put on that is going to be a shorter loan that will help the syndicator change over potentially your management team, will help change over some of the bad paying tenants, which will help do some rehab components so that we raise the rents, we raise the occupancy, and then we're now at a stabilized asset. As a passive investor looking at a deal, if your syndicator is saying, hey, I've got a bridge loan, I would be asking as a passive, what is the takeout? Have you vetted, has actually Fannie or Freddie looked at the deal beforehand and saying, yes, I like this asset. Yes, I like it if it were 90%, and really get a feeling for, do I have enough net worth and liquidity on my team of players to be able to do the takeout? Or am I going to need to put in another person on the GP? And in that case, your investors are going to need to know who that person is, and are we going to approve of that person? So having those conversations up front, knowing the strategy of the lending portion, I think is really, really important.